from an asset allocation perspective, it is important to note that that can be a bit of a subjective consideration depending on the investor's risk appetite. But ultimately what you want to try and achieve is as much growth asset exposure as possible throughout the investment journey to retirement. And growth assets in this instance being equities, property, alternatives is really where you want to try and have as much exposure as possible. If we look at the smooth bonus industry, in all honesty, they are generally quite conservative in the allocation to growth assets. So looking at about 50 to 60% for the bulk of smooth bonus providers. You'll then see on the upper end about 70 to 80%, some sitting, quite a few sitting around 75, 76% in terms of their asset allocation to and exposure to growth assets. But really on the upper end of growth asset exposure, you'll find the absolute growth portfolios with exposure, growth asset exposure of 83%. So that really speaks to having as much growth asset exposure as possible throughout the investment journey, really trying to target as high a possible return as possible over the investment journey to try and really benefit from inflation beating returns. On the flip side though, it's important to note that you do need to manage that within your risk appetite, and there are measures to protect against these often volatile growth assets. And that is of course for AGP, the likes of our smoothing methodology, which protects against short-term underlying return volatility, and in addition, our outright guarantees to set hard limits on losses that can be experienced.